Let's go. Okay. So we're going to be sending you guys out our current portfolio outlook. I do apologize. You can't see this right now. As of the end of 2019, again, we had a stabilized portfolio value of 12 million. Current day, we have a stabilized asset under management value of 13.7 million. That's the value of all our assets as projected once stabilized, 13.7 million. We have cash equivalents today of over $3 million current date. So for you all, you should be concerned about the health of the fund and et cetera. We have over $13 million valuation, stabilized valuation of our assets, over $3 million in cash. We have mortgage interest coming in, rental coming in, this building being stabilized. We have our transactional funding business that is really picking up, giving us high IRR opportunities. I mean, it's really picking up. We have like some good deals in the pipeline. One's a multi-million-dollar transactional funding deal. I don't want to knock on wood, find some wood, may not go through, God forbid, but if it does, it could be a six-figure payday to the fund in one day. One day of lending, six-figure revenue, net profit. Like, guys, we have a path to profits, and we have a plan, and we'll share more of that. But in our portfolio, again, so people ask you, I want to equip our fund members, what do you own besides the Legacy Center? What do you own? Well, we do own the Class A office space, 2.6 acre campus, 30,000 square foot qualified opportunity zone, Legacy Center. Yes, we do, the Black House. We do have collateralized assets on a loan for $438,000 in New Orleans. We do have another loan out for over $300,000 on another, again, development with a Black-owned business and developer. We do have another $200,000 plus loan out with a Black-owned developer. We do have another $50,000 second mortgage on a 14 unit with a Black-owned female developer. We do have our 98 units in Macon, Georgia, that we had a collateralized value of $3.9 million, in which we just got a valuation today of about $4.8 million on that asset, which would even increase our asset under management. And we do have the collateralized value of the 28 units of student housing of $548,000 that we have a loan on as well. So we have activity. There are also several development opportunities being underwritten in the pipeline right now of buying back the block. Some great development opportunities in one of the historical inner cities in our community. I won't say much. I won't jinx us. We'll just perform and we'll just show up. We have other transactional funding opportunities in the pipeline. We're also, through JMA partnership, we are educating more borrowers to be transactional funding clients. So what we're doing through what's called the Cash Buyers Academy is we are marketing and indoctrinating new students to come into the understanding of what real estate transactional funding is and how you can use it. And then through those students, they are using our transactional funding business, thus giving us more interest. But again, being fair and understanding the sensitivity of the intercompany relationships in our conglomerate. I'm a fair man, whether you believe it or not. I'm a really fair guy. Like, that's how my mama raised me. I gotta think about what my grandmama gonna think about what I'm gonna do and what my daughter's gonna think. And my wife don't play that unfair. My wife don't play, she'll pull my card, her mama card, right? This is the spirit of who we are. I'm talking a little, candid with us. I'm saying that to say it would be unfair for the J. Morrison Academy to educate cash buyers, leveraging TREF's transactional funding, and then, to my opinion, and then JMA keep all of those proceeds. That would be to me like, Jay, you're leveraging the TREF transactional funding to get more students in your school, and then you're keeping all the money. That seems unfair to me. So to make a fair agreement is that JMA and TREF are working in partnership where TREF can also receive, through joint venture as a business, it can also receive affiliate revenue, if you will, or revenue or profit share of the enrollment in the cash buyer community that is promoting and empowering borrowers for our transactional funding. It's good business for our fund. So what that means is this, fund partners. So let me break it down from the beginning. All right? And we're going to take some live stream questions, yes, shortly. We will. I want everything. Let's go. I want full transparency today. Transactional funding works like this for the fund. I did this before. I'm going to do it real quick for those who don't know. Here's how we make money with transactional funding. Someone comes to us and says, hey, I got this building under contract, right? They got an apartment complex under contract. This complex is $900,000. Here's how it works. The investor would contract this property. We teach this in the Cash Buyers Academy. We teach the investor how to find an end buyer that wants to buy this property, just say for $1.1 million, right? So that means this person can make $200,000 in one day. This is called a same day flip. This person can buy this property in one day, flip it to this person or this group the same day, write it again, and make $200,000 as a cash buyer. The issue is this person can find the property, this person can find the new buyer, the end buyer it's called, but they may not have $900,000. So TREF swoops in. Hey, same day flipper, we will loan you the $900,000 in one day, no credit checks, no employment verification, no down payment needed, but we protect our interest with our proprietary agreement with our title company. They make sure that our money does not get lost or taken or took, and it's insured by the title company insurance, right? So we're protected regarding our TREF liability. So TREF goes out and loans the $900,000 to this person so they can buy this property. TREF charges them 1% interest. They buy it for $900,000. They sell it for $1.1 million. They make $200,000. We make at least 1% interest. In some cases, 3% interest. 1% being $9,000. So let me break this down. 1%, $9,000 in one day. If we can do this 5 times in a month, that's $45,000 in 1 month that we made with little risk, fast turnover, high yield and profit, and now we made $45K in a month recycling the same $900,000. So that's one business model. So what we did is we said this person has to know what they're doing to maximize this $900 and not to jeopardize our capital. We need educated and smart same-day flippers, wholesalers, investors, and buyers. So through the Cash Buyer Academy, which is a TREF and just JMA simple partnership, we can educate more borrowers to use our capital. The more people we have on the streets and in the real estate industry that understand this business model and go contract deals and use us to fund the deals, that's more revenue that comes back to the fund. Just from a loan perspective, borrowing perspective, right? That's a greater IRR for us. But also, since these folks are enrolling and investing into their education, TREF and JMA also are splitting the empowerment revenue as well. So that way it's fair for TREF, or otherwise JMA can keep it all, but I don't think that's fair. I think our fund deserves some profit share for being able to, even though it really helps the fund to have these students, but these students are incentivized by having a relationship with the lender. And so I'm just being fair and being smart, or what I believe is smart, and doing the best things that I can do in management to allow us to earn revenue in just this one simple way, right? So boom on that. I just want to give perspective. TREF is not funding the J. Morrison Academy. The J. Morrison Academy is, in fairness, supporting its sister company. And they are aligning together because that's, see, I don't want to put race into this, but I just feel like as a community, we see things better when we're not looking at ourselves. And if I were not a black entrepreneur and I were another ethnicity entrepreneur and I had multiple companies and they were sister companies and they could support each other, I would say, and most of us would say that's a smart thing for that, you know, white man, yellow man, red man, whoever man, to do, right? That's hey, to allow your company within good merit, with no manipulation and with no malice and no greed, but to allow your company or to align your company and your conglomerate to be able to benefit or support, each other in that way. I'm sensitive with TREF being a, company with high visibility and compliance and all that. I know. So we make sure that we do things that are as astute and responsible and documented as possible and as fair market exchange as possible, and no favors from TREF to any of the other companies. Like, that's the biggest piece. But to totally separate them from operating and aligning together does not make sense. It's practically impossible, and it's really illogical because it's a benefit to leverage the assets of which are at our disposal. It's like if you all can help us, if you as my partners, it would be silly for you all to have something or a business or an idea that can benefit our company, the Tulsa Real Estate Fund, and you keep it to yourself. And we all are in a company together. So I want to empower more of you to market our transactional funding, market our private lending, market the Cash Buyers Academy. Look more into what you could do, because the more that we bring in and the more we make is the more we get together. Like, that's how we should really be looking at this thing. It's our company. It's not like, hey, Jay, I supported your vision. I mean, I was a CEO, a visionary, but it's our company. This is an investors only, partners only call. This is our organization. This is our baby. We all should respect it and support it and defend it and pour into it. That's how I look at it. I look at it like, whatever I can do to help make it work, I want to try to make it work. Shit, right? So that should be our mentality. So that was just another quick note on the transactional funding piece.